So, very good morning here on a Saturday. And guys, let me tell you, the following live stream episode of this morning is one of the most important episodes that you need to know what is happening on the market, why we had this huge gains in tech stocks, why we have now the crash in tech stocks, right? Something like this I have I never seen something even close to that. This is such a mania and such a crazy scenario that is going on. And yesterday, with some breaking news, it was disclosed who is responsible for that, or responsible for that. I will explain it to you in great detail. I will use this Apple for that. And it will be one of the very most important episodes that you need to watch to understand the market. Okay, so welcome. Let me know as always where you are watching from. Obviously, I'm streaming here from Germany, and I'm having here a couple of guys already. Let me welcome our member Ronnie Freyer from Las Vegas. Then we have Adrian Lim. We have AP. We have people from Oman. We have people from Sweden, Madrid. We have people from Germany as well, and from DC. So very international. Let me know further where we are watching from. Okay, so this is today's agenda. We will talk about, just quickly, really briefly, about some breaking news going on, because I want to go as soon as possible into the main topic. Softbank created this tech rally with billions of stock call options. This is absolutely insane. All right, so this will be so much fun, guys, to explain it to you. Then we will have a quick look into Tesla. Is not included into the S&P 500. That's why Tesla stock after hours went down 6%, right? So this is very unfortunately. And then we have Virgin Galactic just confirmed the test flights. We will know the dates. We will talk about those dates and what does it mean for the stock. So let's dive directly into those breaking news of the overall market. The market is absolutely crazy, guys. Thursday, sell-off. Friday looked like another sell-off, right? Another one. But then it recovered somehow towards the end of the day, and we had a recovery for Tesla, huge recovery for Tesla, and some other stocks like Apple, for example, and good stocks or very well holding assets were, for example, Carnival Corporation, right? Another 5.4%. Lufthansa gained 2.2%, and Tesla finally ended up the day almost 3% positive. But after hours, the stock went absolutely 6% minus. Okay, so this is important to understand that this could impact also the stock next week. Powell said in another interview, this is one of the important news here this morning. He said in an interview that the rates will last forever, for years that low. And this is obviously positive, because this means that growth stocks, the stocks that we are investing here on this channel, will have definitely an advantage over value stocks, and the long-term perspective on those investments will be very important. So this is interesting to see that Powell definitely confirming that he will keep the interest rates very low for years to come. All right, and let's dive now into the main topic. Okay, so, and it's all over the financial news. Financial Times actually got it covered the very first time. So we have seen something very interesting into the markets. Okay, so for once, tech stocks had a huge rally, right? Apple, Amazon, Tesla went like crazy. And it seems that all of this was a kind of a setup for a very big Nasdaq whale that was named just yesterday. It was Softbank, the big venture capital firm from Japan, right? With the Vision Fund, with $1 billion. They are very, very long-term thinking, but seems now they went into the stock market just recently, okay? And here's what they actually did. So they actually bought a lot of tech stocks, all right? So this was the first step. So they bought Amazon. They so they bought Amazon, they bought Tesla, they bought Microsoft, all of these names, they bought huge amount of stocks, right? So this is step number one. Second step, they bought a lot of call options on those stocks, right? So as you know, call options, and I will explain call options in a very easy manner with this Apple here. Call options can give you the advantage that with low investment you can get the same gains of the big stock investments, all right? So this is important to understand. And then the whole market was influenced by these trades by Softbank. So the question is, what will happen next, right? Because if I hope that this moves was obviously long-term moves by Softbank, and we don't see any sales, because if they load off this the stock options as well as the stocks, then we will definitely see a crash into the stock tech market. But let me explain to you what does it mean, the stock options. Okay, so let's say the current market price for apples is $3, right? So $3 for an apple. And I'm an investor, and I think that Apple's prices will increase over the next couple of weeks, let's say until the end of the year. And I think that the price of the Apple will be at least $5. And I hope it will be even $10, right? So there's two options I can do, okay? So options in terms of investment moves. So first of all, I can buy, regular apples, right? I can buy 1,000 apples for $3,000 and, wait until end of the year and try to sell it for, $10,000. I make $10 per apple if I believe that apple will be more valuable, and I would make a profit of $7,000. Now, there is the beautiful stock call options, right? Which is actually an option, a real option to buy an asset for a certain price, right? So I can say, to a call underwriter, let's say it's you, right? You are offering to buy and sell me to buy this apple for $3, and you will charge me $1 for it. Okay, so I will get let's say a piece of paper from you, right? That I have the right to buy apples from you for $3. Okay, in the end of the year. All right, so what you will do, you will get $1 for it, right? This is the price of this option, right? And and instead of buying 3,000 worth of apples, I just bought 1,000 options. Each option is $1 for buying this apple at a certain price, $3, in case it goes up, right? So what I'm actually doing, I have now the right, with this $1,000 paid to you, or $1 per option, that I can buy this apple for $3. Now, what is happening? Let's say a couple of weeks or months ahead, the price of apple will go up, right? So what you need to do, because I have now the option to buy an apple for you from $3, you actually had to buy some apples for $3, right? In case I want to, in the end of the year, say to you, hey, I want to, execute this option and want to buy this apple from you for $3, you obviously need to have this apple, right? So actually what you are doing, you are buying this apple, right? And holding it. So in case, the apple price goes up and I say, I paid $3 $1 for having the apple from you for $3, and now the apple is at $5, you know. So in the end of the year, I will say, you know, here is $3,000. Give me the 1,000 apples, and you will give me the 1,000 apples, and you are happy because, you know, you just bought the apples for 3,000 and sold it for 3,000, but you got also the option premium, right, which was 1,000 or $1 per apple. This is obviously a great deal if you know it's going. You as a call underwriter get, you know, this $1,000 on a $3,000 investment, which is fantastic, right? So it's like a 33% profit. So it's fantastic for you and for me too, right? I mean, I just paid $1,000 as a kind of not an obligation, but an option to buy this apple in case of it's going up. I didn't have to buy the apple for 3,000 and wait and hope that it's going up. I just bought an option to buy those apples for 3,000. So my price actually for the stocks was now the $1,000 for the option of the 1,000 apples, plus the 3,000 that I bought it now. So I paid 4,000 for the 3,000 apples, and now I can, you know, sell it for 5,000 on the market if the market price is 5, right? Now, and as you can see, what Softbank did here, they actually bought the underlying asset. So they first bought the apples, and then they bought again the options on the apples. So as you can see, the call underwriter had to buy also the stock or the apples, right? So the price of the apples went hugely up, and exactly this is what happened with those tech stocks. Okay, so but in such an unbelievable scale, they had options worth of $50 billion of net assets of the underlying assets. So it's unbelievable what happened here. I don't think it's market manipulation, obviously, right? But it's pretty damn close to anything, you know, I have seen. And obviously, you know, now think about it. There's also, you know, a more complicated layer to it, or dimension, because at some point, you know, the price will go higher and higher, and you know, the option price is actually even getting higher than the underlying asset. So the call underwriter had even to buy more and more stocks, which fuels up. Now, what happens now on Thursday, right, is that the stock market went into negative, right, with the sell-off. So the call option underwriter, right, need to also manage his risks and sell also the assets, right? So as you can see, we went up in a crazy rally here, right? Because the call underwriter had to, you know, secure himself. But it's also working other way around. So if there's a market sell-off, then, you know, obviously the call underwriter don't want to own apples, right? Because if the apple price will go further down, then, you know, he want to sell those apples because he don't want to own these apples, right? He just gets his premium, and the other guy is losing, right? Because he paid the premium and the price of apples went further below $3, so he don't want to buy. You know, if the price of apples went down to $1.50, he don't want to buy the apples for $3, right? So he just, you know, loses the premium, the $1 on the apple on the call option. So as you can see, all of this can also go down, and this is the big risk right now here, that this can happen, that, you know, we go into a whole chain reaction now in the negative, right? So this is quite interesting that this can happen. And, you know, why the tech stock rally was that huge? Because actually, you know, you can imagine that, you know, if someone buying a lot of tech stocks, first of all, this is all public information, so people are seeing, you know, there's a big volume in buying these tech stocks. Then you see a lot of calls are being bought. So, you know, algorithms, because a lot of the stock market is currently, you know, traded by machines, is triggered that there's something going on. Plus hedge funds seeing, you know, hey, there is someone very big buying tech stocks, plus stock options, call options. So there must be something, you know, and I don't want to get fired my ass, so I want to buy and be inside this rally, you know. So more and more people bought into this tech stock, and actually those very fueled rally is now a huge problem, because, you know, it you can pretty much say that it's kind of a little bit of a bubble right now, because, you know, it's pretty much fueled by an insane mania on this tech stocks, right? So let's see. This can, you know, what this, and here, you know, this is actually a nice graphic here as well. So you pay the premium, which is the difference between, you know, the strike price and the break-even point is then the premium plus the strike price. So if you want to know more about call options, then I really recommend that you check out some videos out there. But here, this is one of the very important graphics here with the dots. Okay, so as you can see, the VIX, which was triggered, the volatility index, right? Because so many options were traded, went so much high, and also the S&P went high, because the S&P obviously also has a lot of tech stocks with high weight on them. So as you can see, those levels were the last time in 1999. Okay, so .com bubble territory, right? So this is quite concerning, and as you can see here, this graphic is also very important, guys. You don't need to be an expert to see that the call option volume is absolutely insane, right? And this fueled obviously also the whole huge rally. So first of all, I'm super excited, okay? Because something like this, we not see that often. And on the other side, you know, it can happen that actually, you know, all of this turns negative, and you know, then we get you know, a huge sell-off of tech stocks, right? Amazon, Microsoft, Tesla, all of these shares will be sold quite significantly. Okay, so this can happen, but it don't have to happen, right? We don't know, and nobody can estimate. Even looking at the option market, we don't know if this will balance itself out, or, you know, we will see first a small correction and then go up. So therefore, it's important to think long term, because if you're thinking long term, you know, 5-10 years from now, then you definitely will be happy with those stocks, right? On another note, let's have a look. You can subscribe to my second channel as well. This would be highly appreciated. Obviously, follow me on Instagram. And if you want to have this kind of news, you know, breaking news, I post this for my members first in my Discord. If you want to join our membership, press the join button below all my videos, and you will get all the information to join our membership, our Discord channel, or even one-on-one with me, right? Your mentorship with me is quite interesting. So check it out. Then Tesla falls after hours because it was not included into the S&P 500 yet, guys. Okay, so two other stocks, Etsy and Teradyne, were added, but not Tesla. This is obviously very much bad for Tesla, or bearish, you know, short term, because everyone was expecting that the S&P inclusion will happening. Nobody knows why. I didn't find so far a minutes of meeting of this committee, and I don't know if there is anything public about that, because, you know, every quarter, so every 3 months, the committee of the S&P 500 is meeting, and I think one of the reasons why it was not so much I think one of the reasons that it was not included into the S&P is maybe the latest rally on Tesla, right? Maybe they saw, you know, this will bring so much volatility. Let's wait another quarter before we adding Tesla. I don't know. Let's see. I'm quite surprised, and I'm curious to see if this will happen then maybe in a couple of weeks and months to come. Maybe next quarter Tesla will be included. Short term, you know, I think this will be bearish for the stock. So I'm quite interested what will happen. Remember, now with the big call option market in the back of Tesla, this can spiral some short-term very volatility. So this is quite interesting to see. And for all those Virgin Galactic shareholders out there, we have now dates. So we will have the White Knight 2 aircraft for some test flights on the 1st and 7th of October, and the powered flight with crew and I guess with cabin will happen on the 22nd of October. So obviously we will get some footage, some news, some data and so on, and then we will have shortly after that somehow the full rehearsal flight for Virgin Galactic. So it's going on, okay? It's getting there, guys. Just patience with Virgin Galactic. I think, you know, I'm super excited for Q1 when we will see an amazing, great, amazing, great footage of this full rehearsal flight, how the first customers will go to space, okay? Now, let's have a look if we have some questions, because, you know, I know this was not that much of an easy topic, but I hope this helps you to understand the market better and the mechanics behind it. So that's quite interesting. So let's see. Then we have some people from Amsterdam, Las Vegas, Australia, Luxembourg, Texas, Mississippi, Berlin, and what else? Cleveland, Ohio, Canada, Norway, Oslo, and so what we have here? It's healthy for Tesla. Yeah, I mean, corrections are always good. You know, if the stock went so much high so fast, always corrections are pretty well. So I think that's fantastic. And there's some people that sold some Tesla as well. There's people from Saudi Arabia as well. So thank you very much for tuning in. Share this episode for people who are interested in. I enjoyed it so much to explain it to you, you know, to understand the market much better. And don't forget, you know, an apple a day keeps the doctor away, and even Elon Musk, you know, is dancing in the Gigafactory right now. You know, don't forget, think about long-term perspective, guys. So the short-terms volatility will never get to you mentally, and I think that you can be very, very happy owning this kind of shares like Apple, like Tesla. You know, long-term is definitely the way to go. Have a fantastic weekend, right? A safe weekend, a healthy weekend. And I see you in just a couple of hours with my daily vlog. So stay tuned, and thank you so much. Take care and have a fantastic Saturday.